Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Netease Inc. latest report. Netease Inc. offers a diverse range of businesses and services across various sectors. The company's primary focus lies in online games, where it develops and operates mobile and PC games, as well as licenses games from other developers. In addition to gaming, Netease provides music streaming services through its Netease Cloud Music segment. The company also ventures into internet content services, offering digital content with interactive learning features such as Yaodao Lingxi and Yaodao Literature. STEAM courses, adult courses, and online language tools like Yaodao Dictionary are part of this segment. Furthermore, Netease provides AI-driven virtual English-speaking tutors, conversation-based tools, and translation apps. Beyond these core services, the company offers online marketing services, including performance-based advertising and global marketing through various mediums. Additionally, Netease develops and sells smart devices such as dictionaries, listening pods, and learning pads. These innovative products cater to diverse needs, from education to entertainment. Netease NTES has experienced an overall increase in its stock price over the past year, with gains ranging from 8.64% to over 33%. Several significant news events contributed to the company's positive stock performance and investor confidence during this period. One of the key drivers of Netease's stock price increase was the positive analyst outlook and price target raises in November 2025. Financial firms such as CFRA, Benchmark, and Jefferies raised their price targets for Netease, citing its consistent earnings, strong net cash position, and growing monetization of gaming titles. The company's successful game titles, including Marvel Rivals, Where Winds Meet, and Fantasy Westward Journey, also played a significant role in boosting investor confidence. Additionally, the launch of new games such as Fragpunk and Dunk City Dynasty was anticipated to support revenue growth. Netease's strategic incorporation of artificial intelligence, AI, into its game development and operations was another key factor contributing to its positive long-term outlook. The company's commitment to returning value to shareholders through its share repurchase program, which was extended in November 2025, also boosted investor confidence. While the recent fourth quarter 2025 earnings caused a slight dip in the stock due to missing analyst estimates, the period leading up to these results saw sustained positive momentum driven by these factors. Overall, Netease's strong performance and strategic initiatives have contributed to its increased stock price over the past year. Netease Inc. market capitalization of $603 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Netease Inc. holds a significant advantage in their industry. Netease Inc. trades at a higher price-to-earnings ratio of 15 times and a higher price-to-book ratio of 3.29 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 27% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 2.49%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline in the company's financial performance can be identified through a review of key business segments and trends. Revenue growth is primarily driven by the success of certain business units, including games and related value-added services, which saw a significant increase of 9.5%. Additionally, Youdo experienced a notable surge of 21.6%, while Netease Cloud Music grew by 4.7%. The popularity of specific games such as Fantasy Westward, Journey Online, Identity V, Where Winds Meet, and Marvel Rivals also contributed to revenue growth. On the other hand, revenue decline was largely attributed to innovative businesses and others, which saw a substantial decrease of 36.6%. This decline can be partially offset by decreased revenue-sharing costs and lower royalties for licensed games. The net income of the company experienced a mixed trend over the two-year period. While it decreased by 28% in Q4 2024 compared to Q4 2025, it increased by 14.6% from FY24 to FY25. However, when looking at a shorter time frame, such as 3 months ended December 31, 2024 to December 31, 2025, the net income decreased by 28.3%. This inconsistency suggests that there may be underlying factors affecting the company's financial performance. On the other hand, the gross profit margin showed an upward trend, increasing from 55.5% in Q4 2024 to 64.1% in Q4 2025, and from 61.7% in FY24 to 64.8% in FY25. This improvement in gross profit margin is a positive sign for the company's financial health. The net income margin, however, tells a different story. It decreased from 29.6% in Q4 2024 to 22.3% in Q4 2025, but increased from 28.8% in FY24 to 30.9% in FY25. The decline in net income margin in the short term may be due to various factors such as increased expenses or decreased revenue, while the improvement over a longer period suggests that the company is becoming more efficient and profitable. The company's financial performance is a notable aspect of its overall success. One key indicator of this is the generation of positive operating cash flow. This means that the company is able to generate more cash from its core operations than it spends on various activities. According to the provided information, the net cash provided by operating activities for fiscal year 2025 was RMB 50.7 billion. This significant amount indicates a substantial inflow of cash into the business, which can be used to fund future growth initiatives, pay off debts, or distribute dividends to shareholders. The consistency in this figure, as seen on page 13, where it is listed as RMB 50,739,800, further reinforces the notion that the company's operating activities are generating a substantial amount of cash. The generation of positive operating cash flow is a crucial aspect of any business's financial health. It allows companies to invest in their future growth, maintain liquidity, and ultimately drive long-term success. In this case, the company's ability to generate RMB 50.7 billion in net cash from its core operations is a testament to its strong financial performance and sets it up for continued success in the years to come. The company's management has expressed a positive outlook on its future prospects. One key strategy highlighted by the management is the increased investment in marketing expenses. This move aims to boost brand visibility, attract new customers, and ultimately drive revenue growth. Additionally, the management has emphasized the importance of research and development for games and related value-added services. This indicates that the company is committed to innovation and staying ahead of the competition in its industry. By investing in R&D, the company can develop new products and services that meet evolving customer needs and preferences. The company's commitment to its shareholders is evident through its dividend payments. Over the past 2 years, the company has consistently demonstrated its dedication to rewarding its investors with significant payouts. In 2024, a total of $11,165,338 was distributed among shareholders, while in 2025, this amount increased to $13,825,681. These substantial payments reflect the company's confidence in its financial performance and its desire to share its success with those who have invested in it. That concludes the financial summary for Netease Inc. Feel free to comment below, and I will be happy to answer them when possible.